Good day, grade 10. I'm going to start a very, very important part of the work with you today, and it's our first adjustment, and we're going to do depreciation. Now, I think maybe you must just pause this video and just read through page 313. What depreciation is. Now, most of you will know what it is. It's when a fixed asset loses its value because you're using it. You have to pay a price for that, and we call that depreciation. You will see on page 313 it's an imputed expense, so it's a cost that's incurred by using an asset, not actually money spent. And it's the same with some of your other journal entries that we did, like bad debts. It's not money that goes out of your pocket. It's not cash, but it is still an expense, and depreciation is exactly the same. Okay, so when we buy a fixed asset, we enter it in a fixed asset register. Okay, so that's the first thing that we're going to do. And on the fixed asset register, we have all the information. What did we buy? It was a Toyota truck. We bought it on the 1st of March 2017, which is very important. It costs 90,000 Rand. This is where we bought it from. And the depreciation is 10% on the cost price. So every year, we have to calculate 10% on the cost price to calculate the depreciation. Now, you will see you've got a column, and we're going to start very basic. And you will see on the 1st of March 2017, I purchased this truck. And you will see that also on that day, the carrying value is the real value, the value that it costs, the price that it costs minus the depreciation. Now, on this day, it hasn't lost any value, so it is 90,000 Rand, the carrying value. There was no depreciation, there's no calculation, because that's on the day that I buy it, and that is what the value, and we also will talk about the carrying value. Then at the end of the next financial year, on the 1st of March 2017, a financial year that starts there ends on the 28th of February 2018. So a year went by where 10% was written off. So the calculation is going to be 90,000 Rand times 10%. So the depreciation is 9,000 Rand. Accumulated depreciation, I'll explain to you now. There's nothing else than this 9,000 Rand. And what is my carrying value? The cost price minus the depreciation, and that would be 81,000 Rand. Right. Now, the end of the next financial year, so another year went by, 10% on the cost price. Okay, so 90,000 Rand is the cost price of that vehicle, 10%. My annual depreciation is 9,000 Rand. What is my accumulated depreciation now? Accumulated, so you add up all the depreciation so far. So this is going to be 18,000 Rand, okay? And what's my carrying value now? It's the cost price minus the accumulated depreciation, and that would be 72,000 Rand. What happens at the end of the following financial year? It's again 90,000 is the cost price times 10%, and that is 9,000 Rand. And what is my accumulated depreciation now? It's now 27,000 Rand. You add another 9,000 Rand, and this amount is 63,000 Rand. Right, I'm going to do the next video just now.